Well, thank you guys for joining us today. I'm very excited that David Koch is joining us from UMortgage, and David is awesome. One of my go-to guys. And David and I had a conversation recently, um, and David, you told me that nearly 50% of your pre-approvals right now include a bridge loan.
hmm
So, can you expand on that and, talk about what it is that you're seeing going on with the market?
Yeah, absolutely. So I've been posting and letting my partners know, I was going analyzing my pipeline and realized like, wow, like 50% of the active pre-approvals that I have bridge loans attached to them. And that's a first in my career. And I think it's indicative of just where the real estate market is for Illinois. If we take a look at the active number of listings that are available, homes for sale that are actively listed in Illinois for the most recent data that the Federal Reserve Bank of St. Louis puts out is February 2026. If you take a look at February 2026 versus February 2019, so right, like before COVID, like going to like a normal
Yeah.
market, excluding all of the COVID years, we have 62% less homes for sale in the state. So if anyone is feeling the frustration of like, wow, I would love to buy a home if the right home were for sale, that statistically is that phenomenon explained where folks, because for a multitude of reasons, like uh, whether it's their low interest rate that they locked in during the COVID years, or their house is all paid off and they don't want to have to move into a higher monthly payment for renting or whatever it may be, folks are electing to, we're going to stay in our homes for longer. And so that's kind of created this gridlock in a lot of home buyers right now. I mean, I think NAR put out a study that 65% of home buyers in 2025 owned their previous home. So 2020, like 65% of new home buyers this year already own a home. So how do they solve that problem of we want to go to a new location, but we have this previous location? How do we bridge the gap? And there's lots of different strategies to do it. Most folks don't have the liquid cash or savings in
Hmm.
sitting in a savings account to make the down payment. Most folks are using the equity from their previous property.
Sure.
So a bridge loan is, yeah, the tool that is what we use for that particular scenario.
That's
Can
such
you hear
great
it?
data that you
Yeah, yeah.
shared too, because I think so many buyers out there are feeling it. But to
hmm
to hear, that statistic,
Yeah.
2019 compared to
It just validates that they're
2026.
not crazy. Like,
Yeah, exactly.
Mhm. Yeah. So, um, the bridge loan has been a really great strategy for helping to utilize, their wealth inside of their current home for helping them to get to where they want to go. Because, no matter what financial conditions happen, life moves on. New families grow, housing needs change, and
Hmm.
having a solution here or a ready-made process to figure out how to solve that particular problem is what we try to solve problems with loans is what we do in the mortgage industry. So
Yeah.
that's been
Yeah.
mhm,
Thus freeing up more market, more homes for, not just those who already own homes, but for first-time home buyers and
mhm.
whoever else. It helps everyone by easing the gridlock a bit. Yeah. Well, that's great. So, um, you already kind of went over this a little bit, but how would you
Yeah, sorry if I
describe
skipped
what a
ahead.
bridge loan is? Like, what is a bridge loan?
Yes. So a bridge loan is simply you have. Well, let's go over a real life scenario. Say you are a current homeowner that your home is, and I like round numbers for examples. Say
Yeah.
uh, it's a home that's valued at $400,000, right? Say you owe $200,000. So you have $200,000 of available equity that is yours, but it's not currently tappable until you sell or you borrow against it. Say your family needs change and like you need another bedroom, you need an in-law suite, you need something to get you over it. And you would have the available down payment for your home, for the new home, if you sold first, but then who wants to, have a contingent offer, or who wants to have the possibility of like, hey, we have a home listed, but we don't know where we're going to go yet. What a bridge
Right.
loan is, you're borrowing against the equity that you have in your home on a short-term basis. So it's different from a HELOC. HELOCs are more designed for long-term borrowing, where that's going to be your primary residence and you have it, for an extended period of time. Bridge loans are designed to be very short-term, really only 6 months in length at max for that. But you're going to borrow against that available equity up to a certain percentage. That becomes your down payment for your new home. You get your old home available for list, and then buy your new property, sell your vacating property. All the loans are paid off. The bridge loan is paid off, and in one fell swoop, you have your new property before you ever sell your vacating property that is there. So essentially, you are accessing your home's available equity before you sell for the purpose of a down payment. So rather than having to come up with your own 20% or 25% down payment that you would want to do, you have access to it now through that short-term financing option that is the bridge loan. But the problems that help solve, it removes the home sale contingency that you have, that
Yeah.
you don't have to sell before you do. It makes offers cleaner. It puts you in the driver's seat for not having to wait for, well, once we receive an offer, like, no, you can start going out and looking at houses now, just getting it prepared in in that scenario. And then we had mentioned before, I think you had mentioned that oftentimes, like, uh, even if we do the pre-qualification, the pre-approval with the bridge loan, they get under contract, they may not end up even needing it. Just because we do the pre-approval with a bridge loan doesn't mean you have to end up using it. I've had numerous scenarios where, because it's such a hot seller's market in many parts of Illinois, we'll
Hmm.
go under contract with bridge loan financing. The house goes up for list, and then within that week, there's an offer, the closing dates match up, and now we don't need the bridge loan anymore for what's going on. So in that sense, I refer to it as the safety blanket of loans.
I
It's
love
there when
that
you need it.
term.
Mhm. It's there when you need it, and not when you don't.
Yeah. Yeah, that's so
I think I
great.
said that. Yeah.
And you're right, and I'll write a little bit more about this in the blog, but there are other options, including buying contingent on selling, but that can be very difficult.
Yeah.
And especially in multiple offer situations, that definitely makes your offer less appealing. Um, selling with an extended closing date can be done, but it's, there's other ways to do it, but this bridge loan is
Yeah. For
such a great alternative.
it's such a, like, for well qualified individuals, like, it's such a good, like, it is that true safety blanket of, like, getting them in, like, putting them in the driver's seat. You are now making the decisions. You're not contingent upon something, like waiting for something else to come to you. It puts you in the position to where you can go after the thing that you want, which is that next home, and are able to put together a really attractive offer as well for that seller. uh, that they're looking for. Because I think the cleanest offer, the cleanest, most communicative offer wins in
For
a
sure.
really tight market.
Yeah.
Mhm.
Yeah. So you mentioned, obviously we've got the low inventory, competitive buying environment, but also there's a real fear. There's a lot of fear of selling first
Mhm.
because, selling and then buying because it's like, well, what if I end up homeless? What if we don't find the right house?
Yeah,
There's
yeah. Now
there's
we're
a lot
looking at
of
rentals. Now we're looking at what?
yeah.
Yeah. Hmm.
Yeah, and that and rightly so, can cause a lot of fears because then you're working against a clock and there's just a lot of urgency there. And so
Hmm.
that's one of the reasons why I'm sure the bridge loans are so popular, just because all three of those things, low inventory, the fears of selling first, and the competitive buying environment, it helps with all three.
Hmm.
So
Yeah,
you
and
kind
at
of
a
walked
time
us.
too, when home equity is at a record highs as well. Like, I don't think
Oh,
I mentioned that for,
valid.
like,
So true.
yeah,
Yeah.
yeah, for folks even realizing, I didn't know how much equity we had in our home. Where it's, I think the average, since 2020, like, the average homeowner has gained almost $100,000 in home equity, like, since then. So that is a usable resource but until you sell or until you borrow against it, it's just sitting in the house it's putting all of your resources to good use is what a bridge loan does.
Yeah. And those are real numbers. Like,
Mhm.
yeah,
Yeah.
yeah.
And everyone's scenario is different, but on national averages, like that's, the reality for folks.
Right. And you mentioned something that I'd like to go back to, that a lot of your clients don't actually even end up using the bridge loan. That it's
Hmm.
just like a security blanket for them. And at the risk of like repeating ourselves, I just find that it's just worth repeating because
Yeah.
I love how you called it a safety blanket because it truly is.
Yeah, and
Um,
because UMortgage is doing the first loan, like that's like bridge loans are not something that any bank is making money off of. It truly is a tool to facilitate the forward purchase of the new property there, and it helps to facilitate that. There is some minor fee. Generally, depending on how large the bridge loan is anywhere from $1,500 to 2,500. 2,500 is if your bridge loan is over like $250,000. So depending
mhm.
on some properties in Illinois, you're going to qualify for that, or you're going to be doing that. Great. But in the grand scheme of selling a house, it's a very affordable solution to put you in the driver's seat. There's some other programs that are out there that'll want to charge like they advertise as buy before you sell programs that they want like 2 or 3% of the sales price after that, and that ends up being like a pretty big chunk of change, right?
Yeah.
I find this to be like simpler, um, you know, but there's no cancellation fee as well. So like, there's no like someone like, hey, we think we're going to be doing the bridge loan. Oh, it turns out we don't need it. Like it only goes once the loan funds if it's actually needed. So no one's out any money, but it's a tool. It's a tool to help get people, solve problems and solutions for what they're looking for.
And if it is needed and used, and then, the house sells and the clients can pay it off right
Correct.
away. Yeah,
So So in this scenario of say, there are in the waiting period for while the bridge is in existence, it is interest only payments for that. So that definitely helps. But say in that scenario, say there's like a 2 or 3 week gap, right? From someone 2 or 3 week gap from someone buying a place and then waiting for the sell, you're only going to be paying 2 or 3 weeks interest for that particular bridge while you're having it sell. So I think that also the big fear is that I don't want to have to make 2 or 3 mortgage payments at the same time. Definitely a valid concern. Ideally, we don't want that. Ideally, you want to buy the place and then you're selling within 4 weeks before that next mortgage payment comes due. For that, and in a tight inventory market, that is likely, but that's also where you want to be talking to your buyer's agent and listing agent of, all right, what is the strategy to get this accomplished so that we avoid having those payments there. And that's where like a whole realtor and lender team comes together for tailoring the transaction based on those needs.
for sure. For
I put it.
sure. And I'll just give an example, like real life story. Like this weekend, I had a client reach out, kind of out of the blue, and there was a house she was interested in. And um, I asked her, anyway, we did our full buyer consultation. And I asked her, well, will you need to sell before you buy? And she said, I don't really know. And I said, well, I think you should really consider a bridge loan. And I actually called David on a Saturday. I hate calling, I hate calling on a Saturday, but I called him on a Saturday, and he's like, "No problem. Let me send you over some slides that I want you to share with her, just so she can like review it now." And I'm happy to talk to her at any time. And that was super helpful. So thank you for being so on top of it. And when you mentioned having a team, it really is a team. Like when you're working with a lender, buyer's agent, or listing agent, and attorneys, and it's not just one person to
Mm-hmm.
to get the transaction across the finish line. And
Yeah,
it really is important who you work with.
I like to tell folks, being in real estate is realizing that you just do group projects for a living. About like
That's true. That's a great way to
five to
look at
ten,
it.
5 to 10 group projects every month. Hopefully for what you're doing. And yeah, it takes a village. Like buyers and sellers to the closing table and do it on time and in a way that everyone feels like, oh, like I'm taken care of in this scenario. Mhm.
Yeah. Are there any risks that people should be aware of when it comes to bridge loans?
Yeah, I mean, I think it's the carrying risk. Like, and
Hmm.
obviously, like any loan solution that gets presented to a borrower, it needs to be done, all right, eyes wide open. Like, here's all of the, like, here's why I think it's the best solution for you. Here are some of the drawbacks, right? So
Hmm.
it would be irresponsible of a loan officer to present a bridge loan solution and be like, oh, you'll never, and the reality is that like with a short inventory environment, like we're expecting homes to sell quickly. However, with the wrong plan where the home doesn't sell quickly, that buyer needs to be prepared for these are what the payments are going to be if it extends 1 month, 2 months, 3 months in terms of what the carrying costs would be. Um, However, with a proper listing agent, with a proper marketing and listing plan, that home is going to sell at the right price point in the right time frame for what, and correct me if I'm wrong there. That's not my area of expertise, for staying in my lane, but I've talked to enough real estate agents to know that hey, the right home marketed the right way at the right price point should sell within an appropriate time frame, especially
Hmm.
given the inventory that we have. Um, I think that's the real. And then we've talked a little bit about the cost for it being in the budget. Any origination cost that comes from with the 1,500 or 2,500, depending on the size, right? That comes out of the proceeds of the bridge itself. So it's not a check that someone has to write, on closing day of like, let me write $1,500 out of my savings account. Like it comes out of the proceeds of the bridge. Um, for that. So yeah, more so just the carrying costs of hey, what are the risks of me having to carry this if I don't have the right selling strategy? So obviously the seller slash buyer has to be on board with that strategy, knowing the risks. You can't fight your listing agent tooth and nail over pricing strategy
Hmm.
if you're truly hiring them for their expertise. But that is the main risk that's associated with the bridge, is I would say, is lack of understanding about the carrying costs for what can happen. And if for whatever reason there are extensions, I know I mentioned that it's expected for 6 months. There can be an extension beyond that to 12,
Hmm.
um, but that would be an extreme scenario for that.
Yeah. Well, this has been great. Is there anything else, David, you would like to add?
Not if I would say if anyone is like the pre-approval process is designed to bring clarity. I think a lot of folks assume that like they say like I'm going to apply for a mortgage and it's people get visions of like this is scary. Someone's going to judge me based on my creditworthiness or income, whatever. And that's not what the process is designed to do. It's designed to give clarity and options for folks. I always like to end all of my applications, after we answer all the questions of like, see, that was pretty painless, right? Like well, yeah, it actually was. So if you're wandering and you're like, what's possible? What are the possibilities out there? I highly encourage you to find a professional that you trust, have a conversation, and see what's out there. That's really it.
Yeah, that's great.
Mhm.
Awesome. Well, thank you so much. And I'm sure that this will be very helpful to a lot of people. So thank you,
Yeah.
David.
Thanks, Jamie. Thanks for asking me to do this. This is really fun.
Yeah.
Mhm.
Bye.
Thanks, Jamie. Take care.